Hey, what's up, great people, and welcome to another episode. It's a new week, and of course, if you know it's a new week, it's another episode of the TechTrends Podcast where we get to sit down and talk about some of the interesting things that happened in tech in the previous week or even this week. So, good to see you, Alan.
Yeah, good to see you too.
How's your week so far?
Kuna joto. Yeah, but it's good.
Yeah, it's good. Yeah. So, just offline, we were talking about a very interesting thing that happened in the African tech ecosystem the other week. Of course, if you've noticed, we've covered a lot of startups in this episode, in previous episodes. During the African Tech Summit, we spoke to Andrew and we spoke widely about the ecosystem in general. We spoke about funding. We spoke about, general overview of the startup market in Africa. And last week, we had some quite interesting developments, that I think are going to affect how startups grow and how they're going to affect basically the funding ecosystem in Africa. So two things happened. So we had Mastercard Foundation announcing that it's exiting, the top VC firm, and so they pulled out a commitment to invest $100 million in leading African venture capital firm. And of course, it came at a time when African startups were really struggling to really convince and Western investors. And you remember during the interview with Andrew, I remember asking him, why do we get to see a lot of, very few local investors investing in African startups? There's this over-reliance by African startups in the West, and we touched how even the recent ban by the Trump administration, how that is going to affect the funding in Africa. And now Mastercard came out with another announcement, which again is going to affect the startup. So to kick us off, what impact do you think this is going to have in these startups?
So first, it's going to slow things for the startups that were receiving funding, like as an immediate effect. Then also on the short term, there'll have to be like a shift in terms of like the fundraising mechanisms being used in terms of like most of the startups have been going to the venture capitalist for initial financing. So there'll have to now be like a shift in terms of like moving to a different fundraising model for the initial during the initial years of starting.
Okay. And so there are quite a number of factors. Remember, as I said, it's not the first time we are seeing this happening. There are a lot of other VCs that have actually closed shop. And when you look at the numbers, I didn't get time to actually research on the numbers. I'm not sure if you did, but there's been a serious decline, in VC funding for African startups.
Yeah.
Right. There's been a serious decline. When you compare, for example, in the last year, at the time like this, we were covering a lot of news on startups raising funding. But over the years, let me say, towards the end of this last year, there's things that a lot of investors were trying to, they were giving reasons why they're not putting money in African startups. Yeah? And of course, some of these reasons actually, they're like economic factors. So you're looking at things like, rising interest rates.
Yeah.
You're looking at, the tightening global market. Then there's that bit where I always find quite interesting, the reduced investor appetite for risky investments. Because investing in a startup is a risky investment you're taking as an investor.
So I think more investors are looking for more like mature businesses. Then also the inflation rate sort of like makes it a little bit worse, because at the end of the day, you're not sure, like you invest at this point, what happens tomorrow. So your money might have either like there's dilution or something. And then also the change in global economics. Also, like the changes that are being made, still like the US change in administration is still affecting most of it because the geopolitical aspect, it's changing a lot. Kenya, Rwanda, and Nigeria are key like startup.
Let's call the big four countries.
The big four. So looking at the issue between Rwanda and Congo is causing also tension between the same is also coming into play because there's also tension between South Africa and Rwanda. Then Kenya is also mixed in terms of like the DRC war, right? So the geopolitical changes is causing tension and tension among the Western investors. And then the US-Africa relations also, it's not clear going forward how the relationships will be. Then when I was reading it, the decision through like for Mastercard, I read it from sort of like a third eye. USAID exits, which creates like a gap in terms of like grant funding. Then them also being an ungovernmental organization that is very like Mastercard Foundation being an ungovernmental organization, I'm kind of feeling part of their financing is also dependent on the grants from the US government. And that creates now institutional funding gap that they cannot pull through within the short period. And so they head now to sort of like halt the commitment to see what happens to USAID in the short term. And then from there, possibly now they can reconsider, or if not, then the funding is gone.
Right. Do you think, because I believe one of the reasons we get to see this happening is, of course, liquidity concerns.
Yeah.
I mean, do you believe, the fact that we have very fewer IPOs and acquisitions opportunities in the African market, some investors are actually very skeptical about actually investing in African startups?
Do we have really exits that have happened in Africa? No. No. So that is making it worse because still the business model that works for African market is yet to be known. Yeah.
I think there's a connection between actually Mastercard and 54 Collective, which is another VC firm that now they actually shut down. 54 Collective is now the former Founders Factory. They were really big, and they also announced that they were shutting down, and they have invested in over 70 startups since they were founded in 2018. And so these are two stories, Mastercard and 54 Collective, and it's raising a lot of concerns actually about the future of startup funding, as we said earlier, which of course has seen a 25% year on and decline in 2024. It's the same question I asked Andrew during the Africa Tech Summit. Do you think now is the time for now African startups to create sustainable business models, independent of philanthropic, funding? Is it the time?
Yeah. So at the end of the day, like in our previous episode, I mentioned that in Africa we really don't have the startup model. We have sort of like the SME model. And the SME model is you have to grow with customers.
Yeah.
So like the aspect of having to develop a fully finished product before getting customers and then you acquire customers becomes unsustainable for the African market.
Yeah.
So the first thing is like startups have to adopt a different customer acquisition model in terms of where they grow with customers, in terms like, yes, you have funding, but then you have income coming that keeps growing to sustain the business to a level now you're able to move from micro SME to small SME. Then now you grow to that level the different levels sustainably, rather than burning capital, and with the hope that you will get customers later. Let's first test and all that. That model won't be sustainable for the African market for a long time. It's the same model with the model that works well is the Chinese model. So because for them, they test first with the people, and then from there, yes, they have enough funding to keep pushing, but customers are key. That usually becomes central to driving the growth of the business. And that's the first thing. Then also delinking in terms of like having to understand like what the local investors want, and building like an ecosystem of local investors. That would be easier, like will make it easy, sort of like you're able to tap into the local resources. Because I believe like Africa, we have billionaires that would be interested to invest. What we lack is the structured fund, sort of like the Silicon Valley venture capital. They come together and they pool the resources together, and they have the fund that you can tap into. So once we have the structure,
have a local show that I don't remember the name, but I think it was on NTV. Where guys would be invited to pitch the ideas. I remember a funny video of someone coming to pitch about a calendar.
So you see, like the same Dragon's Den.
Just called Dragon's Den, or I don't know, something close to that.
Yeah. So no, Lion's Den.
Lion's Den, yes.
Yeah. So which was a version of of the UK Dragon's Den.
Oh, there's a Dragon's Den in the UK as well. Okay.
So you see now, like, and if you like they did couple seasons, then the commitment from the investors, I don't know, either dried off, or we couldn't find more investors willing to join. To join the rounds.
Because in the case of 54 Collective, one of their biggest investors, it was a VC fund. So one of the biggest investors was Mastercard. So when Mastercard pulled out, it was their time to also leave. And 54 Collective actually invested in quite a number of companies, some of which we have covered, including Bupas, Lipa Later, Zanifu, Shamba Pride, Vunapay, all these startups. My hope is that's not the only funding this startup had raised from
investors.
Yeah, from investors. And I'm hoping they are not relying on 54 Collective to help them raise more money. That's going
I think they were, because there are possibility, because the commitment was a 5-year commitment.
Yeah.
And I think this was to be the 3rd year, if I'm not wrong. But so they were to be putting 20 million every year. So I'm not sure it's clear whether this was their 5th year or the commitment has been cut off in between the 5 years.
Let's look at the broader impact of this recent announcements, right? Do you think, does it really reflect a larger issue of within the startup incubators and VC backed firm? Because I'm always thinking, it's good. I mean, we've seen a lot of they're called fund managers coming up. Why don't we see just VCs directly investing in startups? They have to rely, on fund managers. So as a fund manager, nitapewa pesa, then my job will be to decide which startups actually get that money.
I think it's the structure of investing, the way inakuanga imewekwa, because you have kuna wale wanaweka pesa, and then there are those who are supposed to invest the money. So the fund manager job yake ni kutafuta good deals and good companies that are qualified to invest, and then now generate returns. So there's a limited companies, limited partners who bring in the money. Then now the general partners who invest the money. So your job is basically to find the deals, then generate returns, and that cycle goes on. So unfortunately now, with most of the investment funds, when they are fundraising for new rounds, they still go to the West to look for the financing, which now becomes a bit of a challenge, because at the end of the day, if the limited company partners are coming from the West, if any of them, if something happens over there, then now you are left vulnerable within the fund.
Yes. So there's one point, I had indicated in the notes just before we came to this podcast, and it was about government support. I know we should not dream about government support and all things, but things about regulations.
Yeah,
they are created by government, right? Of course, we need to talk about how government should step up support struggling startups. We need to see startup bills being created. Like in Kenya, I know we have one.
We have one.
That Ruto, okay, Ruto is the president. Let me Ruto, the Kenyan president, said he had promised to sign the bill. It's the startup bill 2022 into law. He had promised to sign the bill by April. That was last year. Until now, nothing has happened. And actually, that bill has been in the works from 2021. It seeks to govern the interaction between the government, incubators, startups, and investors. And of course, startups operating in Kenya will receive incentives such as tax breaks, access to credit, a move, of course, that is expected to boost the ecosystem in general in countries like Kenya.
Yeah.
Do you think such kind of support will actually change the way we view this ecosystem?
Yeah, it would. So the main challenge is I'm not sure if the government itself understands the startup ecosystem enough to be, and then how the startup ecosystem links in with the small business. You see, because at the end of the day, like most startups that go for VC funding, they are tech based. So we have now to be able basically to integrate the tech based businesses into the economy, which on the side of the government, it's taking the long-term view. So that's where you see like the government wants to first build Konza City. Once the Konza City is done, now we will start doing innovation and all that. You find building the infrastructure doesn't solve the funding problem. You see, because at the end of the day, like most startups operate right now. Most of the guys innovate from home. Some of them are in the incubation centers. So unless now you are building like Konza City to absorb all the incubation centers in Kenya before you start investing, that will work. But the model now being used is of long-term. First of all, building the infrastructure, which is long-term. It doesn't solve the short-term needs. So what needs to happen is, first of all, I feel the government needs to form like sort of like a government-initiated fund that is able now to distribute the funds to the rest of the investment.
We've seen that being tested. We've seen government. Is it Uwezo Fund?
Enterprise Youth Enterprise Fund.
We've seen the Hustler Fund.
Fund.
What are the results? Uwezo Fund was embezzled.
Youth Enterprise Fund embezzled.
And people arrested.
Now Hustler Fund is...
Hustler Fund, people are taking loans, they're not paying.
The other day, like the youth have defaulted by 23 billion.
Exactly. And even the Hustler Fund, I was just reading an article the other day how the money was being dispersed to underage people who are not even rich. So where was this money going? So it means someone was pocketing that, So
like the 500 you receive, there was no... As long as you have an ID, that's it. There's no proof of where the money is going and all that.
So what makes you sure if we have a startup fund?
This one I was looking at it being investor oriented. You see, like you have serious people putting money, and then these funds, this fund being sort of like managed separately, in collaboration with the fund managers. So you have like, for instance, the government investing, let's say we say, okay, we are forming this fund. It will be regulated under the government, right? And the government is going to put maybe 70% of the money, and the 30% is open for other limited partners to bring in the money. And then it's up now to the fund managers to be able to work with the incubators, right? To find a better mechanism to be able to be funding maybe, let's say, even 100 startups every year. You see, that is that one will be like a structured way of where new ideas come into the market, and then they are supported over them. Like if we take like 100 startups every year, they are supported for 5 years. Then now they integrate into the main economy after growing. You see, then that cycle goes on like that. It becomes very, very clear. Then it will also prevent embezzlement, because at the end of the day, the fund managers are responsible for the government return. For next year's funding to be available, you must showcase what happened, which startups were invested this year, and the report must be tabled for review and approval, and even the recommendations being made. So outside, because even like in Silicon Valley, you'll find like the federal government investing within these funds, right? But they have no control of where the money goes. Like there is a system of every year, like competitions, innovation challenges, and all that. But you see, in Kenya, you'll find like the Presidential Innovation Challenge. The person controlling understands. We have
Presidential Innovation Challenge. Okay,
we do. We even have like an innovation agency within the government. So essentially, like I know, like the government wants to make more tax revenue. It wants to earn more money, and sort of like, if this is to be integrated within the economic factors, right, then Treasury would also be able come in, like Treasury comes in as an investor within this fund. You see, and through now the results that will be like, even if we did like a pilot of 5 years, within those results that will have been gotten at that time, we'll be able to inform now the next phase of the fund.
And of course, this just we actually in March, so it's really early in the year. And really we are seeing this news of these VC farms shutting down. Does it mean we're going to see a lot of other accelerators facing this same fate? Because especially with the funding freeze, especially from the US.
It's going to happen, because at the end of the day, we have dependent on Western funding for a very long time. And honestly, like especially even with the model, like I mentioned, with the model of financing, pitching and all that, everything is borrowed. So unless like even like the startup founders come together to sort of like find a structure that works, then it's not going to change at all. Like more startups are going to shut, incubators will shut, because at the end of the day, the model we are using is not ours. And if it's being challenged from the West themselves, then we have no say. And from the look of things, honestly, Trump is not stopping now. Like ataendelea kufinya at the end of the day.
Finya. Anyway, so bootstrapping, crowdfunding, will that really help? Alternative funding models, actually, maybe something they need to think about.
So sort of like basically testing with the customers. First, let's move to like mostly bootstrapping, testing with the customer, raising money from family and friends in Kenya and even Africa. It's not, you wouldn't say it's can, like, for instance, like help you raise like $1 million or no, like the kind of money at the end of the day, like the waste put in companies, I'm not sure our economy is able to like substitute just by doing just like friends and family rounds. Maybe crowdfunding will help, but then you have to be able now to be solving like a global problem that relates both locally and the outside. But still, the major part is startups have to make the local ecosystem understand them.
I wanted us to make this episode I wanted us to make it as short as possible. But one last thing I think we need to talk about, of course we've seen sectors like fintech and the likes receiving a good chunk of funding. My thinking is maybe there are new sectors or trends that could attract investor interest. Apart from, is it like to invest for fintech? Invest. Let's look for alternative, sectors to invest in. Is
agritech? Agritech is going to, has started like getting interest.
A lot of AI startups as well.
AI, and then also with the exit of USAID, health tech is a key. It's a key sector that more people want to invest because it's now becoming more critical than before. So if startups are able to innovate a lot around health, then more funding. Then education a little bit, but not much. Mostly, I would say health and agriculture. Then also renewable energy. It hasn't been talked to. Sustainability also. It's a key sector that will get interest.
E-mobility.
Yes.
Yep. Thank you so much, Alan. As I said, we wanted to make it as short as possible because I'm working on an article around that. That is just detailing how this is going to affect the ecosystem in general. Again, what we should expect moving forward. And if really these startups need to pivot or just, look for alternative sustainable models. I'm going to try get, excerpts from the interview we did with Andrew from Africa Tech Summit, because he gave quite very interesting insights on that around this space and what more we should expect.
Yep.
So thank you so much for watching and listening to this latest episode of our TechTrends Podcast. My name is Nick Kanali. I'll see you in the next episode.